First up, let's go to Nvidia, ticker symbol NVDA, you know it, accusing the Biden administration of threatening innovation and economic growth as the White House unveils new export limits on the sale of AI chips. The rules establish caps on the amount of computing power that can be sold to most countries and are set to take effect in 1 year. Nvidia's Vice President of Government Affairs, Ned Finkel, writing in a blog post, quote, "Rather than mitigate any threats, the new Biden rules would only weaken America's global competitiveness, undermining the innovation that has kept the U.S. ahead." There you're seeing that statement in part. He goes on to write, while cloaked in the guise of anti-China measure, these rules would do nothing to enhance U.S. securities, and the new rules would control technology worldwide, including technology already widely available in mainstream gaming PCs, consumer hardware, and ultimately talking about how this limits or weakens, from their perspective, America's global competitiveness.
Yeah, Brad, what stuck out to me in this statement here from NVIDIA, and also what we're hearing from industry inside groups, is just the focus here. They're looking past the Biden administration, really trying to appeal to the Trump administration. We're 1 week out from the inauguration. And within the statement, that very last paragraph here from NVIDIA, they talked about the fact that they said, quote, "As the Trump administration demonstrated, America wins through innovation competition by sharing technologies with the world, not by retreating." Also went on to say, "We look forward to a return to policies that strengthen American leadership." Semiconductor Industry Association was also very quick to criticize this rule from the Biden administration, also focusing their efforts, suggesting that new policies should be designed by the incoming Trump administration. So they're doing all they can to appeal to the incoming administration, trying to get incoming President-elect Donald Trump here to potentially appeal some of these laws that will be put into place. In terms of the context of how big of a deal this is for NVIDIA, you can see the reaction on the screen right now, off just about 4%. A lot of this is just some of that jitteriness that we're seeing surrounding the market about what that backlash is going to look like from China, how far and how deep some of these back and forth tit for tat curbs can go here, and ultimately who is going to then be holding the bag, who's going to have the biggest impact, or who is going to suffer the most from these. And you could take a look at even just NVIDIA's concern from this. It's obviously a challenge, a headwind that they are watching very closely.
Yeah, about an 11% drawdown since last week. If you take a look at the 5-day chart, we should also note that this company did just see a new all-time high last week. And so we'll see, even with this response to the outgoing administration, how they're able to be successful in cozying up to the incoming administration.
Nvidia takes a bold step to criticize Joe Biden's latest country-specific chip sanctions that are surely going to hurt Nvidia and the tech market at large. The Biden administration's bold regulatory shift has gotten the market watchers and tech enthusiasts to gossip about its implications. Stay tuned as we delve into the ongoing discourse enveloping these potential policy changes and what Nvidia has to say about them. Welcome back to Investocracy.
NVIDIA CEO Jensen Huang in visiting China this week as the White House announces new export limits on AI chips. The new curbs causing shares to sell off over the last several days here. How do you view these new rules impacting NVIDIA and other chip companies in the year ahead?
First of all, it's pretty unclear and it's unprecedented. And what I mean by unclear is the ruling relates to semiconductors that either are purpose-built for AI or are designed for AI. And that would put all gaming chips, for example, in that category. They might be primarily designed for gaming, but they're very much designed to have AI capabilities in them. And on the unprecedented part, you're looking at 120 countries, many of them sitting in the EU, like Portugal or even Mexico, that now have limits on that. And this is all going to be managed by a government agency. And I can't think of a worse thing for innovation and speed and revenue than having a traffic cop. I think we're all in on national security, but this is the wrong answer, and I fully expect the new administration coming in to overturn most of the onerous elements of this and maybe provide some clarification.
So then, Patrick, I guess then that would lead me to believe that the market's reaction might be a bit of an overreaction if you are confident that we are going to see a quick change once Trump does enter the White House.
I mean, 2 or 3% and on Nvidia, and Nvidia was sliding based on the perceptions coming out of CES 2025. I think investors took it as a non-issue or a wait and see until the new administration comes in.
Okay, so all these things considered, how are these companies going to be navigating some of the international relationships that they've also communicated to investors is baked into some of their own growth anticipations as well?
Well, if this moves forward and it goes into effect in 120 days, unless the new administration comes in and squashes it or slow it down, is they have to hire a bunch of consultants to figure out how to manage that. There's a 128-page document that lacks a bit of clarity. And what they're going to have to do is every company is going to come up with their own strategy to deal with this. A lot of companies aren't going to have an issue because they have nothing to do with clusters. But when you look at AI clusters, when you look at companies like Nvidia and AMD, they're going to have to get, and even Intel, they're going to have to get very clinical on exactly how many chips that they can ship into a certain country. And I think the EU's response, that's typically pretty onerous and heavy-handed, they're even saying that this move is a step in the wrong direction and can potentially shift them in the hands of buying more from companies like Huawei, which is exactly the opposite of what this IFR is supposed to achieve.
As the Biden administration crafts new regulatory strategies to limit AI chip exports, NVIDIA's executive, Ned Finkel, has vocalized concerns that this could tilt the balance unfavorably for the U.S. Rather than reinforcing national security, Finkel suggests these moves might inadvertently escalate the global race for alternative technologies. Backed with recent data, the proposed rules aim to implement stringent tiers, restricting chip exports while fostering alliances under Washington's terms. Researched insights from Bloomberg indicate that these rules could serve as a pivotal strategy in consolidating AI development among U.S. allies. But before going on with the video, are you into cryptocurrency? If so, check out our second channel, Investocracy Crypto. We bring you breaking news, expert analysis, and the latest trends in the fast-moving world of digital assets. Whether you're a seasoned crypto investor or just curious about the future of finance, we've got something for you. Click the link in the description to subscribe to Investocracy Crypto now. Don't miss out and stay ahead of the game. Now, let's get back to the video.
Joining me now, Mark Newton, Global Head of Technical Strategy at Fundstrat Global Advisors. Mark, good morning. Thanks so much for joining us.
Thanks, Frank. Great to
All right. So we just heard Rick Reeder say the market's got some pretty good footing. He sees, more upside to come. We actually want to look at some areas of the market where there's been a little bit of pressure, and you also see some upside. Why don't we start with the S&P 500?
Sounds good, Frank. Let's take a look at the S&P.
Yeah. So, Mark, if you don't mind, if I start, for the last month, S&P down. We're going to go over here. A little bit of weakness, down about 3.5%. But you're saying there's an upside trend overall that you're bullish on.
Yeah, I agree, Frank. When you look at the longer-term trend, despite all the damage we've seen in the market this year, starting really last December, we've not really seen sufficient evidence of the market truly breaking down. That's thanks to technology. So 5,700 is really an important spot. Any sort of weakness into CPI, that would be something investors really want to consider, that trends have not shown sufficient deterioration to turn to negative at this point.
So does that signal we're going to see a bounce in the S&P 500 after CPI in your mind? Is the momentum just going to pull us that way, even if we get a hotter than expected CPI, or is it dependent on the CPI report?
So look, Reeder has his fundamental thoughts. I have my technical thoughts. Both of them say that markets are near levels within 3 to 5 days where we're going to bottom out. So longer-term trends remain intact. Sentiment's gotten a little skittish. Technology, to its credit, has been able to hold the market up. That's a great point and really a reason why we're likely to stabilize. Significant support down near 5,700. Not only is it line up with last November's lows, but also lengthier long-term uptrends just from 2023. So really, really good support is a good time to buy, in my view.
Sentiment might be a little bit more than skittish. I think the VIX is up to about 20 right now. So a lot of index investors especially are going to be glad to hear you say that there's going to be a bounce in the S&P 500. We want to move to one of the most widely held stocks in the market. That's Nvidia. So I was just looking at the charts myself. I'm not a chart master like you are, but I was looking at the charts myself. Since CES, which is a very small part of this chart, I'm looking at Nvidia, down just about 8% since there. We all thought that alligator jacket would lead to a rally. I guess it didn't. But you're saying there's a trend here that you're seeing as well that's setting up NVIDIA for a potential bounce.
Yeah, so despite a lot of the carnage we've seen in semis since last July, when you look at NVIDIA, this continues to be a standout leader. And similar to the broader S&P, the stock has pulled back to almost exactly where it needs to think that, okay, it's a great risk reward. Short-term weakness, but no longer-term trend damage. Investors want to be buyers into this pullback.
All right, so I just want to ask you this. NVIDIA is a chip stock. These are cyclical stocks. So when you're looking at the technicals of this stock and you see this trend, any concern that the cycle comes to an end at some point, and that's the downturn?
Well, we have to let the stock tell us that. Okay. And unfortunately, we can't bet against ongoing uptrends. You know, most of the stocks is down about 16% from its July peaks of last year. NVIDIA still within striking distance of all-time highs. So, you know, it seems like a very severe short-term pullback. The key lesson for investors is always put the short-term price movement into context of what the longer-term charts are showing. And so the longer-term charts show this remains in great shape.
We got one more. We got to do this one quick, Mark. This is the equal-weighted financials. So, again, I'm looking at the charts. I want to be like you. I want to be a chart master. Last month, equal-weight financials actually down just about 5%. What's the trend that you're seeing here, and how does it impact it or influenced by earnings season?
So look, financials is one of the largest sectors within the S&P outside of healthcare. You know, technology being number one at 30%. Similar to all these other charts we've seen, the pullback has not done any real damage. We're down to levels that make really, really good sense. And this is an equal-weighted financial from Invesco. So we strip out the Berkshire Hathaway, the JP Morgan. Financials has pulled back to a great level. My thinking is yields start to roll over. That's been specifically coinciding with this market carnage. I like buying financials.
Finkel, however, contends that the broad country cap could disrupt the typical operations of even basic data center computers, suggesting this approach may draw criticisms globally rather than applause. Meanwhile, Nvidia and its contemporaries brace for ramifications stretching across the semiconductor market, potentially reshaping competitive dynamics in this vital industry. But before going any further, if you made it this far into the video, thank you. These videos take a lot of effort and time to make, so if you enjoyed them, please hit the like button and subscribe to the channel. This goes a long way in helping us grow. That said, back to the video.
Taking a look at NVIDIA removed from a top list. So let's hear about this.
In terms of a key catalyst, but yeah, we're keeping an eye on NVIDIA shares, just checking here, down about 2% right now. There are a few headlines for the chip maker. Of course, yesterday, the Biden administration outlined the AI chip restrictions that would apply caps on U.S. exports to more than 120 countries beyond China. So that's, we know China is already subject to strict limits. So in terms of some of the analyst activity we're hearing, we did see Citi remove its catalyst watch on NVIDIA over the Biden regulation risk. Citi removed the 90-day positive catalyst watch on shares, but did keep a buy rating on shares, $175 price target. They do point out that the new rules have no near-term impact as they're not enforceable for 120 days, but overall did say that it's a longer-term risk to NVIDIA's data center sales. Meanwhile, JP Morgan reiterated NVIDIA as overweight following a meeting with NVIDIA management at the JP Morgan Healthcare Conference. Actually points out that the healthcare vertical business is estimated to drive $1 billion plus of annual recurring revenues in fiscal year 2026, making it one of the top vertical market segments within NVIDIA's data center business. Not every day that we talk about NVIDIA in terms of healthcare. And then Jefferies actually said that a few other chip names will see more upside than NVIDIA this year, highlighting Broadcom and Marvell Technologies, saying we continue to like NVIDIA on the precipice of the Blackwell ramp, but see more upside in Broadcom and Marvell as they ride the wave of rising demand for custom silicon. So outside of the analyst activity, we also have the information reporting yesterday that NVIDIA's Blackwell chips are experiencing some overheating issues, some connectivity glitches impacting some of NVIDIA's biggest customers. The information further notes that Microsoft, Amazon, Alphabet or Google, and Meta have each placed Blackwell rack orders worth $10 billion or more. So they're impacted by these delays. So quite a few headlines circling around NVIDIA, despite the fact that analysts are still very bullish on shares, not doing much to help Nvidia shares today. They're down about 2% and now down about 5% so far in 2025.
As Nvidia and fellow semiconductor titans navigate these murky waters, the pivotal question remains: how will these developments influence the stock's future trajectory? Most forecasts depict a resilient outlook for Nvidia, marked by its robust market positioning and continual innovation streak. Analysts predict that despite short-term turbulence, Nvidia's shares will demonstrate upward momentum, fueled by ongoing demand for AI technologies across various sectors. But what do you think about all of this and the implications it holds for the future of the tech and AI market? Share your thoughts. And finally, if you would like to know what companies like Nvidia have been up to these past few days, go ahead and click on the next video on your screen. See you there.